you today?
Hi, Pamela. Very well, thank you. Thanks for having me on.
Yeah, delighted to have you. So glad you could join us. What an interesting 24 hours it's been. Not unexpected. That said, just sort of go into the market reaction for us because we've seen the results. Are stock markets hugely impacted generally by elections?
Well, I mean, no, they're not. Is the short answer in the long run, and especially when they're not unexpected. And this election was pretty well flagged. We've known for some time that the Labour Party was likely to win the election, and in fact, last night the exit polls came out. Exactly spot on. I mean, they were uncannily accurate in terms of the number of seats for Labour. It's a very big majority. It's the biggest majority since the last time that the Labour Party was elected after many years of Conservative rule. Very similar large majority to when Tony Blair was elected in 1997. But these things don't happen very often, actually, these transfers of power in the UK from one party to the other. I was just thinking about this. In the last 50 years, it's really only happened 3 times. So in 1979, we had Margaret Thatcher being elected. 1997, Tony Blair was then elected for the Labour Party. And then in 2010, David Cameron elected for the Conservatives again. So we've really only had 3 changes of power in the last 50 years.
So this is big, and what do we expect that's either different or there's been lots of discussions of sort of there's an oasis within the UK of sort of calm or stable. Why do we keep hearing that?
Yeah, so I mean, do you know what? I never thought I'd say these words, but Britain now feels like a beacon of stability, really, in a pretty unstable world, and I think that has been reflected in the market reaction to the election result. So, although it was not unexpected, it was expected the result and even the scale of the result. But the equity market reaction broadly positive. The fixed income markets, the bond market, pretty positive, and the pound rose, rose modestly on the results this morning. So really, in the 3 main barometers of how the markets are feeling about an event like an election, it was a positive response.
And tell us a little bit about the story of growth, the path of interest rates. I mean, I think it's the same path as everyone's experiencing in similar markets around the world. But just take us there to the cuts story, where and when, and then the story of growth and how inflation was just massive in the UK how many months ago, and it's really come down.
Yeah, so let's deal with the inflation first of all, because that is an interesting story. I mean, you go back 18, 20 months ago, and Britain was an outlier for all the wrong reasons on the inflation front. So we had inflation running at over 11% at the end of 2022. The most recent figure that we had last month showed that inflation is now back to the 2% Bank of England target. So that's been a remarkable improvement in the inflation story. And I think what that sets us up for is an interest rate cut from the Bank of England, possibly as soon as the next meeting, which is in August. Cut beneath the surface, though, and inflation is, not quite as clear cut as that, because although the headline inflation is running at 2%, it's all being driven by goods inflation. There's been a big fall in energy costs, and food inflation has fallen quite sharply as well. But if you look at the underlying service sector inflation, and in particular wage inflation, they're both running way above target. So wages are still growing at about 6% a year, and service sector inflation at 5.7% a year. So, the Bank of England is not rushing into cutting interest rates, and it's possible that they will not cut as far as maybe investors had priced in and anticipated. But I think the direction of travel for interest rates is certainly downwards from here.
So this is the environment, the economic environment that the new party with Sir Keir Starmer dives into. He's appointed a new Chancellor of the Exchequer. We call him Finance Minister. And what do we know about her?
Well, the first thing we know about her is that she's the first female Chancellor of the Exchequer that we've ever had. So that's quite a significant
Bravo.
moment. She's extremely well regarded. She is a former Bank of England economist, so she knows what she's talking about, and she and Keir Starmer, the leader, or the new Prime Minister, we should call him now, are both considered to be, sensible politicians. And I think this feeds into this narrative of stability in the UK, that I think that the markets and business indeed are really warming to a new administration, which is not going to take any silly risks with the economy. And of course, we have form here in the UK. You only have to go back to the end of 2022 with the short-lived Liz Truss government, on which the bond market cast a very unfavourable assessment of the unfunded tax cuts that were proposed by that government. So the Labour Party has really gone to great pains to suggest that they're not going to do anything silly with the economy, and so far the markets are giving them the benefit of the doubt.
So things like trade, it's a trading nation, of course. Let's go into sort of the trade, foreign and direct investment, and where that stands, and where, because it sounds like that's going to potentially raise the stakes for more of that. Let's go into sort of the trade story and relations outside of Britain, and then we'll talk about more of the domestic.
Yes, so I mean, really, this is all about growth. I mean, what Labour has made economic growth a priority. The assessment is that we cannot cut ourselves to an improving economic situation. We have to generate growth, and the fact of the matter is that the UK's growth rate since the financial crisis, and even more so since COVID, has been extremely disappointing. And so, the new Labour government has correctly, in my view, identified economic growth as being the target. One of the key ways that they think that they're going to do that is to rebuild relationships with the EU post-Brexit. The Brexit vote was now 8 years ago. It's a long time in the past. We're not going to go back into the EU anytime soon. I mean, I would say, probably, for a generation, but that doesn't mean that, at the margins, the relationship in terms of trading relationships, tariffs, that kind of thing cannot be significantly improved. And it's interesting that, the election of the Labour government has been warmly welcomed by the EU so far.
Interesting. Okay, so maybe some stitches around the edge there of better relations there ultimately. Take a look through some of the sectors and just tell us if there's sort of changes to note. And I don't know if they're necessarily directly related to the election themselves, but what essentially is the policy of this government coming in, and which sectors might it affect positively and negatively?
Yeah, no, there are definitely some quite clear-cut sector implications of the election. I think probably the one of the most interesting is in the house building sector. The UK has been building too few houses for many years. Complex planning system. There are reasons why we have not built as many houses as we need to. That is a focus of the Labour Party. And in fact, this morning, when the markets opened, some of the biggest share price rises were among the house builders and the construction companies. And indeed, infrastructure generally is seen as a positive. The focus on renewable energy, the move towards net zero, the Labour Party has been more explicit about that than the Conservatives would have been. So I think construction infrastructure spending generally is a positive. I think some of the negatives might be around oil and gas. The Labour Party has talked in its manifesto about a windfall tax on oil and gas companies. There is already a windfall tax on those companies, but extending that. That's a negative. I think some of the utilities will be in focus. We've had a lot of issues in the UK with the water companies, for example, and they will very much be in the focus of the government.
Tell us ultimately the financial sector. I mean, we talk about it, and it's a slightly different financial sector here in Canada. We have a bit of a fortress with very few banks, but in the UK, what's the approach to the financial, specifically the banks?
So I think the approach to the banks will probably be more positive now because a strong banking sector is fundamental to this growth push. If you can view the banks as a source of investment and lending to grow the economy, or you can view them as a target to be regulated and taxed. And I think that the mood music from the new Labour government is that the banks will be seen as a positive in that bid to grow the economy.
Okay, for lending and for getting into that. I noticed in one of the notes that you were talking about a little bit of this is the defense spending story that most countries are paying closer attention to right now. What about the UK?
Yes, well, the Labour Party in its manifesto was clear about a desire to increase defence spending up to 2.5% of GDP. And again, that's being seen as a positive for example, for the aerospace sector.
Okay, very interesting how all of this works. And the renewable energy, you mentioned that. Will that be in conjunction with sort of maneuvers with the EU countries as well? I mean, it's often thought of as sort of how the entire European economy is approaching that. And there's some breakage there, actually, because others have prioritized different things of late. But what do you expect on that front in terms of?
Well, I think in terms of regulation and licenses to build, for example, onshore wind farms, that has been a contentious issue between the different parties. And so I think, again, the backdrop for renewable wind energy is more positive under this government than would have been with the previous government.
Okay, fantastic. Let's go a little bit domestic to sort of the domestic tax story again, which is domestic, but it's also global because so many countries coming out of COVID and the COVID years are finding themselves in a situation where they probably need to tax. What is the story here, and how might it alter with the Labour government?
Yeah, so I mean, if I think about the implications of the change of government, on the one hand, you've got the market implications that we've just been discussing, and the sector implications. You've then got the more sort of personal household finance implications. And while I think that there's more certainty on the stock market front, I think that there is less certainty on the personal finances front because whoever had won this election, they will face the similar set of issues, low growth, not enough tax revenues, high spending requirements. As a country, we want European services, we want American levels of taxation, and something has to give there. And the expectation is that taxes are going to have to rise further. They're already at a 70-year high as a proportion of GDP in the UK. So that's a difficult thing to pull off. And the Labour government, well, before the election, in its manifesto, ruled out increases in the big taxes, so income tax, national insurance, which is a form of income tax here, and value-added tax. They ruled out increases in those. That doesn't leave too many other taxes for them to focus on. And so the speculation is around capital gains tax, inheritance tax, and the treatment of pensions, all of which are highly contentious areas and difficult to manage. So I don't think we're going to get any news immediately on that. I think the Labour government has indicated that they want to go back to just having one big fiscal event a year, one budget a year, which will be in the autumn, probably in September or October. So I think we've got maybe 3 months ahead of us in which to think about our tax planning, because I think we could have changes coming down the track.
Fascinating how all of this sort of will come together. When you take a look at the tailwinds for the UK economy, certainly the Bank of England story is in there. You've got it sounds like some optimism about a more stable government. I mean, it's an interesting place that it seems a lot of investors are looking to right now. Let's talk about the foreign direct investment opportunities, basically. What may come through the door due to this new change and shift in the tailwinds?
Yeah, well, I suppose there are a couple of ways of looking at this. One is just in terms of stock market investment, and what we've seen is we've not seen a big increase in flows into the UK stock market from overseas investors. What we have seen though is an increase in M&A activity. That many overseas investors, particularly from the US, but also from Asia, are looking at UK quoted companies and thinking that they represent extremely good value. The UK stock market is valued on a very low multiple of earnings, about 11 times expected earnings. That compares with 21 times in the US. Maybe mid-teens in Japan, maybe 13 or 14 in Europe. So the UK is a particularly cheap stock market. And so I think overseas investors see that as an opportunity. So we're seeing an uptick in M&A. But then the direct investment question is interesting. And I think I think that the government would be keen to encourage direct investment into many different industries. And one of the things which will determine that, I think, is the closeness of our relationship with the EU, because obviously Brexit was off-putting for overseas direct investment in the UK, because the UK was seen as a gateway into the European market. And while, as I say, we're not going to go back into the EU, I think at the margin the relationship will be closer in the years ahead, and that I think could encourage foreign direct investment.
Will the city be bolstered? Well, I mean, there are jobs that have left and that have gone, for instance, to France. Is there a chance that either they come back or there's sort of a retrenchment of some sort?
Yeah, I mean, I think that London has always enjoyed advantages, and so I think the Brexit was definitely a challenge for the City of London, and I think so. The more that we can have a closer relationship with the EU, I think that does work in the favour of the city as well as other industries.
Okay, fascinating. A couple of questions coming in here. So let's go into this one. So is there any indication of when UK-US bilateral trade agreement is expected to take place? That was, again, kind of shelved at one stage, just other fish to fry. I think I remember Boris Johnson saying that's where it sort of ended. What do you think on that?
Well, I mean, that raises another fascinating question for the second half of this year, of course, which is what's going to happen in the US. And then clearly, now the UK election is out of the way. At the weekend coming, the French election will be out of the way. That's another interesting political story at the moment. But once that is out of the way, then really the second half political focus will be very much on the US. And I think trade relationships between the UK and the US will be a consequence of what happens there. And, at the moment, we just don't know.
Yeah. Okay. We just have to. And is it party related? Is there any reason? I don't know. Just give us a little bit more on that, because of course we don't know, but at the same time, there is a deglobalization story, but there's also firming up of certain allies and trading partnerships and that kind of thing, and sort of new ones being formed. I don't know, just speak a bit more to that, even though we don't know. So what's at stake?
Yes, I mean, I don't think that there is a particularly a party aspect to this. I think that, and it comes back to this growth focus. I think that that Labour has identified economic growth as being, and trade growth as being, a priority. So I think that they are going to do everything that they can to encourage those relationships. And to an extent, we are swimming against the tide of deglobalization. And sort of localization of trading patterns. But the UK is a trading nation, is an external looking nation, and I think if we are to energize the economy and to grow significantly again, then that is going to be a way to do it.
Fascinating how all of this will work. I wonder if we can take a look at some of the big companies traded through the LSE. There's been news around some of them. Some of them have to do with commodities, certainly, but it's obviously a place for global finance. You've mentioned valuations are on a relative basis very attractive. What do we sort of expect to see just out of interest in that market itself? Do you think people have been there and ready because we kind of knew the outcome of this election before it happened? I mean, is it going to be a long, slow burn, I guess is the question.
Yeah, I mean, I think the UK is a particularly international market. I mean, the FTSE 100 index in particular is full of companies which are driven by global factors. The commodities companies you mentioned, oil and gas, pharmaceuticals companies. So the success of the UK market at the top level, the FTSE 100 is very much determined by global factors, what's going on in the broader economy. The FTSE 250 is a much more domestically focused market. And interestingly, if you look at the market reaction this morning, the FTSE 250 actually bounced more strongly than the FTSE 100. So I think people do see this election result as being a positive for the domestic economy.
Yeah, that's fascinating how that works. Okay, another question coming in. Do you see the election result affecting the parity of the pound compared to other major currencies? I mean, to some extent, there's a story of the US dollar as well that fits with this, but speak to that dynamic.
Yes, so what we saw this morning was a modest improvement in the level of sterling against the dollar, in particular. Now, in a way, you would expect the pound to weaken, because I think that we are looking at the prospect of the UK being quite early into the rate cutting cycle. So I think that the Bank of England is likely to cut rates before the Federal Reserve. So that would be a negative for the market. So I think I think that the fact that it went the other way is an indication that the stability argument is a positive for sterling. And yes, you're right. Exchange rates are a two-way thing. So it's not just about the pound; it's about what happens to the dollar. And I think that what we're seeing in the interest rate story is a greater reluctance from the Federal Reserve to cut interest rates, because the US economy, is so strong. We are beginning to see signs of potential weakening of the US economy, but for now, you roll back to the beginning of the year when you think that the market was expecting as many as 6 quarter-point rate cuts in the US. It now looks like if we get one, it will be somewhat surprising. We may well not have any rate cuts in the US this year. That's obviously supportive for the dollar.
Yeah, fascinating how all of that works. You've mentioned it through some of the sectors that you've mentioned that are priorities to this incoming government. But I guess just a little bit more, if you would, on the room for fiscal policy. This goes back to the story of when Liz Truss came in and had sort of unfunded policies, and that was obviously a major problem. Is there room at this stage to have some serious new policies, or do they have to walk that road very carefully?
I think there's very little room for them to do anything very much at all. The spending requirements are significant, and the government has ring-fenced a number of areas of spending which are sacrosanct. So the health service, for example, and education, those are big areas of spend. They need to keep spending in those areas. That means that other areas really face ongoing austerity, and we've had many years of this. So I think that the public services in Britain are in a poor state after many years of inadequate spending. At the same time, our level of taxation, as a percentage of GDP is running at a multi-decade high. So that doesn't leave much room for maneuver for a government. I mean, it's a difficult inheritance. It really is. And, any new government comes in and they have, they will never have this level of sort of public support again. This is high water mark. Day one is as good as it gets. And, it is going to be a significant challenge.
Yeah, the clock starts ticking on the 100 days right away. Absolutely. So they sort of have the smiles for now. Give us a little sense of the debt that's being serviced within the UK. What is it any different to? I mean, they often say the US is the best of the lot in some ways, in terms of being able to fund it for a period of time, but there are a lot of people worried about it. What's the situation in the UK?
Yeah, so I mean, I think that debt is running, at close to 100% of GDP. It's a high level of debt. First of all, the financial crisis, then COVID. We have spent a lot of money. We have high debt. I think the good news is that if you look at the bond market, and again, the reaction this morning was positive. So gilt yields running at. The 10-year gilt yield is running at 4.2%. It actually fell by a few basis points this morning. So that's a positive. I think that the markets are relaxed about the government's stated intention to borrow to invest. And I think that, I think that the new government will be given the benefit of the doubt to do that for now. The bond markets hold governments to account, and in due course they will no doubt do that. But for now, I think the bond market is feeling fairly relaxed.
So somewhat to come around to where you began, or I think you actually even said this in advance of it, like sort of a reassuringly boring and stable reaction, which is great for investment. I'll just let you sort of make a final comment on that. But I remember you saying that.
Absolutely. I mean, I think that's a good way of expressing it. I think that the UK does feel reassuringly boring at the moment, and in an unstable world, I think that's a real positive for the UK as an investment destination.
Aren't we lucky to have you giving us these details all about it, and to fill us in on all the blanks for the investment story. Tom Stevenson, have a great weekend.
Thank you very much.